Hi guys. So this is the trade breakdown of the whole trade I took this week. So today is 24th of January 2026. So for the last week, I only take two trades last week. But let me break it down. Now, first of all, this was a break that we have last week. We have this break of structure last week, right? Now, this break of structure, we are expecting the price to continue trading down after it swept this liquidity zone. After this liquidity zone, so what I was expecting was I want the price come and take out this zone, which is the new week. I want the price come and take out this zone the new week, then continue selling. But eventually, price is not come. Price failed to continue trading bearish and switch direction to bullish. Now, and I did not use to trade on Monday. I didn't trade on Monday, so all this was Monday move, Monday and Tuesday, and on Tuesday, price break another structure, which is a swing high. Now, price breaking this swing high, I'm supposed to be looking forward for a buy for a long trade, which is buy. I'm supposed to be looking for a buy setup. But based on the higher time frame picture, I have still seen that okay, the market is still likely to sell more. I see that okay, the market is likely to sell more. That is why I did not what that is why I did not enter for buy. And apart from that, there is more small gap that the middle price is still likely coming to feature that's this one here as well. But eventually I am still looking for short position, which is I still stick to the bearish trade, whereas market has already changed the structure to the upside. Now after price break the structure, there is no setup on Monday, Tuesday, and on Wednesday there is no setup as well. Now price try to break this zone here. This is another swing point, a major swing point here. So price tried to break it, and from this zone, I was expecting two things. I know that the moment price break through this zone, definitely the market has already shifted the structure. Why? Because the first structure has been broken, the first swing structure has been broken, then the second one as well. So if price managed to break out of it, definitely it means what? A change in what? A change in direction. But now price failed to break it, which creates this long week rejection. So which creates this long week rejection, which creates this long week rejection here, which price failed to break. So the moment I saw this week rejection, I was thinking the market, I hope this zone was holding, which means we are about to start selling because of this rejection. But on the long run, the market just retreats a little bit. So and this retreat was for the whole move of Monday, Tuesday, and Wednesday. This whole move, we need a trace for it. And so the market just retraced. Now why they tracing? Yeah, I have not seen any stop from on Monday, Tuesday, and Wednesday. There's no stop. So I mark out this zone as the break. And as you can all see, this break is literally not clear. This break that I marked out here, it is not clear. Can you see? It is not a clear break of structure. But I just marked it out. I forced this trade actually. So I just mark it out. And after marking it out, I mark the liquidity zone. And even the liquidity zone that I marked out, it is not obvious. And the liquidity zone is not clear. So this is the liquidity zone that I marked out. This is the life for the liquidity zone that I marked out. So after marking the liquidity zone out, this is the break, right? This is what I mark as the break. Now after the break, then I mark the breakout candle, which is this candle is what is the candle that break it, and mark the liquidity zone out. And this is the liquidity zone exactly that I mark out. So this is the liquidity zone. Then I place my entry at this point. This is where I entered this from. So I entered this trade from exactly this point, which is the liquidity zone. Now after I entered this trade, at that point, the market just tapped me in during the New York section. And after market tapped me in, just continue moving against me. Just continue moving against me and continue trading bullish. Which means what? the market has already shifted structure from bearish to bullish. And what I did not close this trade actually. I did not close the trade. So I was holding it and I macro managed the trade. I was monitoring the trade, checking every candle how it went. And I see that okay, oh, the market is not ready to sell anymore. We are now bullish, we are now buying. But I stayed until the trade until it hit my word, my stop loss. And now I realize that okay, I'm the one at fault because I forced this setup. The break of structure is not clear. Same thing as the liquidity zone that I marked that as well. It is not clear as well. So this is the first trade that I took and it was a loss. And that's the reason for the loss. The setup was not clear. I forced it. Now the second trade, now after price hits my stop loss, then price tends to break this new structure, this new high, this new high. You remember this is a swing point that price is likely to break and got rejected massively, and now price traded to that zone exactly and break it. And now let me delete this yesterday chart. So now this is the break. This is the candle that break the structure. Can you see? This is the break of structure. This is the break of structure. So now after this break of structure, what do I do next? I mark out what my liquidity zone. And where is my liquidity zone? And for the liquidity zone, I use the line chart to mark my liquidity zone. So this is the liquidity zone that I marked out. Here exactly is the liquidity zone that I marked out. This is the liquidity zone that I marked out. Now, after I mark this liquidity zone, then I set my entry. I set my entry, and eventually, price was price was unable to come into my entry point. Oh, now I see that I am the one that did mistake at this. Now, eventually, price is not coming in because this is my liquidity zone that I selected. This is the liquidity zone that I selected, and price is just one pips away to tap me in. One pips away to tap me, and this trade I took it on Friday. So price is just one pips away to tap me in. Eventually, just move without tapping me in and go straight to take profit. And now the mistake from this trade is now when I went to the line charts, I went to check it very well. I realized that I am the one that used the wrong liquidity zone. My liquidity zone was too deep. Why? I'm supposed to put it exactly at the line. Can you see? This is it. So if my entry was exactly on the line chart, definitely I'll be in this trade. But I use the candle wick, which is this candle wick. That's what I use. And eventually price just left me and just moved in my direction. So that is the trade I took this week. And those are the two mistakes that I made. For the first one is I froze the setup, and the second one is my liquidity zone is actually correct. This setup was not forced, but instead of me to use the line chart liquidity zone, I use the candle wick instead. So which made me miss this trade. So that is the update on trade, and next week I'll definitely do better. Thank you.